afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. All right, April inflation might have been steady, but that still did not prevent shares from retreating for the fourth straight day. Local stocks barely holding on to the 6,300 level as it declined 0.9% to 6,299.69. That's after BSP Governor Ben Jokno said inflation is projected to remain elevated this year due to supply side pressure, but he still expects that to taper off the midpoint of target range in 2022. He made those comments after consumer prices rose 4.5% in April, again the same level seen in March and lower than what analysts expected at 4.7% year on year. However, that more than doubles April 2020 clip at 2.2%. Food and non-alcoholic beverages remain to be the main drivers at 4.8%, chipping in 40.9% of the overall inflation print for the month of April. Earlier this morning, ING Manila Chief Economist Nikki Mapa said the country has yet to see the effect of Executive Order 128, which lowers tariff on pork importation. He noted, however, that how pork prices remain steady at roughly about 22%. Now, Jokno expects a cut in pork import tariff to help address supply constraints and ease price pressures. That expectation that inflation will remain elevated, sending shares on a four-day decline, now down 2.9% since Friday. Now, let's take a check of how specific stocks are performing after that inflation report here. As you can see, a number of consumer-related stocks here leading those declines, particularly JG Summit here is in the red, down close to 3% at 50 pesos and 90 centavos a share. URC likewise, as you can see, also in the negative territory, inching lower by 2.7% at 128 apiece. The same can be said for Pure Gold. That's also lower by over 2%, as well as LT Group here, lower by 1.4%, even as they expect opening up of economy to actually bode well for most of their units. One specific stock, though, that we have to keep an eye on would have to be SM Investments. That's after they reported net income growing by 5% to 9.5 billion pesos. Also, revenue, however, coming in lower by 13% year on year to 96.9 billion pesos. Their banking unit still has the lion's share of their total profit for the first quarter of 2021 at 54%. That's after net income came in at 10.4 billion pesos, which saw a 19% increase. Their property unit, however, chipping in 33% share in their total profit. Retail, on the other hand, has a 13% share. SMIC President and CEO Frederick De Buncio said that they have reduced their operating costs and are benefiting from the high levels of cost efficiency that they have focused on, at least during the past 12 months. SM prices, you can see here, down 0.9%, mirroring the sell-off in the main index, now at 951 apiece. Now, a quick check at the local currency after it breached the 47 level this morning for the first time since February. Sadly, though, that wasn't sustained. It's now back at the 48 per dollar resistance level, now at 48.105 to the greenback. As MECQ extends in Metro Manila until mid-May, how might this impact the outlook for the property space? To talk about their insights, we have Colliers Associate Director for Research, Joey Bondoc. Good afternoon, Joey.
Hi, Jess. Good afternoon.
Okay, so Joey, how has the return to stricter quarantine affected office space take-up in the Metro?
Well, definitely, stricter lockdown in Metro Manila has hampered the potential for recovery because for the first quarter of 2021, we actually recorded the highest level of transaction since the second quarter of 2020 during, tight form of lockdown across Metro Manila. So we were already seeing green shoots of recovery, at least for the office market. However, the imposition or reimposition of a stricter lockdown in Metro Manila has really affected the potential for this recovery. So it is interesting to see moving forward over the next few quarters how the market will respond to the restriction imposed by the government, and if companies will continue to implement work from home, or will they implement a mix of traditional office on-site reporting and the work from home strategy.
Okay, Joey, what I'm interested about as well is office space in NCR still in a glut here. Until when do you see this extending, or is there no sign yet that vacancy rate will taper off anytime soon?
We are not likely to see vacancy declining over the next 12 months, Jess, because for 2021, in fact, our forecast is that vacancy all over Metro Manila will increase to about 12.5% from 11% in 2020. Note that since 2020, this is really starting to increase because in 2019, we saw a sub 10% vacancy. This rose significantly in 2020, and for 2021, this is likely to peak at 12.5%. In fact, based on our forecast, beyond 2021, vacancy will likely hover between 12 to 13%. So we're not likely to see a significant improvement in vacancy, because you also have to note that there is substantial new office supply that is likely to be completed. For example, for this year, 2021, we're likely to see about 800,000 square meters of new office space that will be completed. So just imagine that, again, adding to the total office stock that we currently have in Metro Manila.
So do you see at least vacancy rate in office space in Metro Manila at least returning to pre-pandemic levels by 2023 at least?
We're likely to see some green shoots of recovery by 2022, because there's a lot of interesting insights and occupiers of office space right now. Jess, you have companies such as logistics company, you have e-commerce firms like Shopee, for example, occupying 19,000 square meters of office space in Ortiga Central Business District. You have pharmaceutical companies, even some knowledge process outsourcing companies that are continuously looking for office space. And we believe that beyond 2021, these companies will likely take up these office spaces. We have clients that are still looking for office space, perhaps not in Makati CBD, but in other key locations in Metro Manila, Quezon City, or Alabang, Las Piñas area. And what's interesting also, Jess, is the fact that it's not just in Metro Manila that we're seeing companies, BPO firms expanding. You have some BPOs that are aggressively looking for office space outside of Metro Manila, because they believe that the COVID situation is somehow contained in these key areas such as Pampanga, Laguna, Cebu, Iloilo. Iloilo is an interesting city because it has limited office supply, but we see a lot of BPO firms continuously looking for office space in Iloilo. So certain developers will, of course, benefit from continued office space absorption in these areas outside of Metro Manila.
Well, good thing that you mentioned about BPOs, because I also want to focus on one other sector here, believed to at least prior to the pandemic as one of the main drivers, even in the property space. I'm talking about POGOs. We did interview PAGCOR, and they did say that only around 30 firms are now licensed from as much as 60 prior to the pandemic. How has that affected the landscape?
Well, that's correct, Jess, because the total office space absorbed or taken up by POGOs, in fact, peaked at more than 1 million square meters, 1.2 million square meters. But we now see about 400,000 square meters of office space being vacated by these offshore gaming companies from China, because they went back to China, they pre-terminated here, so their office spaces has now been returned to the market. So it has really contributed to higher vacancy. You have to note that Pogo is or was a substantial, significant player in the property market. They used to occupy a lot of office space in key business districts such as the Bay Area. But because of these POGOs having limited office take up now, and of course, some of them, a lot of them, in fact, the vacating office space, this has also affected the take up of residential condominium units in selected business districts across Metro Manila. So it has really hampered the growth of the property sector. But of course, what's notable and positive for the property market is that you still see some demand, and we believe that there will be a revival, especially from the likes of BPOs, logistics companies,
Mhm.
that we believe will be able to offset this increasing of vacancies in the market, both for office as well as residential
Okay,
sector.
good thing that you touched on the residential sector there. What's the overall vacancy rate now in Metro Manila? And what's striking about your report as well is how low rates have gone down, at least during the pandemic period. Do you
Well,
see this in any way recovering in the near term?
Well, Jess, of residential vacancies, condominium vacancies have really increased across Metro Manila. So you have condominiums, for example, that remain vacant. Vacancy peaked at about 16% first quarter of 2021 from the previous record high, which is about 15% in 2020. The problem is we're not out of the woods yet. We're even projecting a much higher vacancy in the residential market, reaching about 17% for the remainder of 2021. And as a result, prices dropped by 12% in 2020 after 10 consecutive years of increase in prices, and also rents dropped in 2020. You have some condos that were previously being leased at about 50, 60,000 pesos per month. But now you have unit owners even struggling to find tenants at the rate of about 25, 30,000 pesos. So it's still a precarious environment for the condominium market. And we hope that its recovery will really depend on the recovery of the office market, because these two property segments really move in step with each other.
All right, thank you very much for those insights, Joey Bondoc, Associate Director for Research over at
Thank you,
Colliers
Jess.
International. Thank you, Joey. Here are other headlines we're keeping our eyes on. Negotiations for the takeover of the Hanjin shipyard in Subic may wrap up in 2 months. This was confirmed by Australian Ambassador to the Philippines, Stephen Robinson. Australian shipbuilder Ostal and a US-based company are planning to take over the site previously controlled by Hanjin Philippines. The South Korean firm started operations at the Subic facility back in 2016, but declared bankruptcy 2 years ago. Ostal currently makes catamaran and trimaran ferries in the Philippines for the international market. It currently operates a facility in Balamban, Cebu with 900 local employees. Robinson said Ostal is committed to invest further in the Philippines as it eyes to become the shipbuilder of choice in the region. Local meat importers are urging the government to extend the implementation of lower tariffs on imported pork over the next 4 years or until 2025. In a letter to Senate President Tito Soto, the Meat Importers and Traders Association said the move will provide a steady supply of pork for consumers and also give time for the hog industry to recover. MITA President Jesus Cham described as reasonable the Senate's compromise proposal to lower the tariff rates for pork imports within the minimum access volume quota to 15% and out quota pork imports at 20%. But Cham said this move should be effective until 2025 to allow local hog raisers to be more competitive and to recover losses from the ASF outbreak. Senator Ping Lacson, however, noted that the compromise proposed by Senate is the best that hog raisers can get. Cham told Businessworld that once the tariffs are lowered, the estimated price of imported pork shoulder will be at 300 pesos per kilogram, while pork belly will be at 350 pesos per kilo. And those are the biggest stories this trading day, May 5, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.